right, hey guys. See if you be in here. Oh, Christian, you look cold, my friend.
Hey,
Cold in Denmark, huh?
uh, slightly, slightly. I'm
Yeah.
just,
My goodness, it looks like it.
I don't like cold.
All right, let's do that over here. All right, guys, we're going to cover a few things today, so just want to give a few minutes for others to come in and we'll get after it. But I'm sure a lot of you guys know or have been here before, but anyone who has not, I'm expecting a few new ones today, but and also I'm sure this recording will go out. But the way these things usually work is I give a presentation and a bit of a workshop, if you will. And today I actually have two. We're going to talk about options on request, and I want to talk about robotics because I think it's fun and I think it's important. I think it's coming. I think it's a good opportunity. And then, of course, we'll do the live market analysis. And today, I think we can keep that pretty brief. I want to go through everything, but you guys have heard the way I feel about the market. So I think that'll be pretty simple today. And then I'll talk about some longer term ideas. I want to talk about the Tom tool, the updates to that, and just sort of talk about what this market correction could give us in a way of opportunities for longer term positioning. And then, as always, we'll do some questions and names I was asked about in chat this week, and just open up for general questions. And we'll have chances for a couple of questions throughout as well. Let me go ahead and get ourselves ready. Okay. All right, so guys, there's a chat over on my side, but there is a chat if you guys want to sort of let me go through the slides here, and I will peek over. As I said, I've got two little presentations today. I'll peek over at chat as things are winding down for each and address any questions that are coming in. And then once we get through these slides, then I'll be looking at chat more often for any questions as I go through analysis and some of the longer term stuff as I discussed. But I think I was going to give it 5 minutes, but maybe two is enough. We'll let people come on in as they do. Yeah, I want to start today with options. And listen, when I buy options, I keep it pretty simple, and that is on purpose. I'm looking to add leverage to my process, not complexity. I'm not trying to build some hyper complex options model every time I take a trade. I tried that, it didn't work for me. I'm usually using calls and puts in the same way that I would use simple shares. And that's just with defined capital, more leverage, right? I'm applying more leverage to the same positions I take on the chart with shares. I think I'll make that more clear here soon. But my first question is still the same as it would be with the stock. And what is the model? Why am I entering? Why am I interested? What is the structure? What are the ground rules? What is my risk? What is my target? That always comes first, and that's decided on the charts and the structure, certainly not on the Greeks. Okay? Oh, shoot. So then I choose a contract that gives me enough time to be right without taking unnecessary stress from short dated volatility. I do not do short dated options. 99% of the time, and that is simply my risk tolerance for volatility. In order to fit within my risk tolerance or profile, if I do short dated, like same week expiry, I've got to size down so small to stay within my risk profile that I demand myself to do that it's not even worth it, right? I just choose to do slightly longer. I very rarely go same week. Same day, I mean, gosh, I don't remember the last time I did a same day, zero DTE expiration. But anyways, for my swing trades, I simply look at two things when eyeing a trigger and selecting an expiration date. When is the next earnings? That's always first for me. And then I like to look at the chart and let it speak to me. What is the stock's typical ability to move or the behavior at the inflection point? So if I'm looking at the triple R model, I look at previous triple Rs, a lot of them, not just the last. But if we're in a leader in a trend, there's typically multiple triple R's before the one I'm looking at. And I like to just look at it and see, like, what is this thing's ability to move? And you can use some tools to measure that, but I've gotten to where eyes work good enough for me. And again, we'll cover that here in a moment. And next, I do think the Greeks matter. I don't make them the center of my process. I use them more as a way to understand the behavior of the contract that I'm buying. And it's important to understand how they can affect pricing. But again, I don't let this weigh too heavily on my decision making personally. So we're going to go through them. We'll start with delta here. And delta is the first Greek that I care about, or that maybe I'll calculate from time to time. And the easiest way to think about delta is how much my options should move if the stock moves $1. So if I buy a call with a delta of 0.6, then that option should move about 60 cents for every dollar move in the underlying. And that's all else equal. Okay, that moves. If it's 0.5, then it's 50 cents per dollar. And that matters because the delta tells me how much stock-like exposure I'm actually getting. If I go too far out of the money, then the delta gets too low, and now I need a bigger stock move, an underlying move, just to make the option respond the way that I want, to get the leverage that I want. And that's one reason I usually like at or slightly in the money contracts. They tend to behave more like the underlying stock and less like a lottery ticket. Again, I'm not trying to use options for extreme lottery style volatility. I can't handle that personally. And I just want to add some palpable leverage to a move I know happens more often than not. So I'm not sitting there optimizing delta mathematically. I simply don't. Okay, I don't calculate all of this on my swing trading. I told you what I do, and we'll review it again at the end. But it can be used to avoid, delta can be used to avoid buying contracts that are too weak and too dependent on a miracle move. Okay. And we've got theta. This is one that I do pay attention to, and that does help me and hurt me from time to time. But theta is one that most swing traders need to respect. Theta is time decay, and it tells you how much value the option is losing as time passes, assuming everything else stays the same. And this is exactly why I don't like short-dated options for my style. Even if I'm right on direction, then short-dated contracts can still punish me because time is working against me too aggressively. If I go same week or same day expiry, the option can lose value fast if the stock does not move soon enough. And we'll look at my recent ARC trade as an example on this. It's going to frustrate me, but it happens, and that's the world of options, okay? But that's why I usually try to buy more time than I think I need. I want the trade thesis to have room to work, and I would rather pay a little bit more for the time than get forced into perfect timing, meaning, frankly, I would rather leave a little profitability on the table to be sure that I have time for my projected move. I hope that makes sense. So for me, theta is not something I model deeply. It's more of a reminder. Don't let a good idea get ruined by a bad time window. And next up is gamma. It matters most when you're getting closer to expiration. Gamma tells you how fast delta changes as the stock moves. And a simple version of this is short-dated options can start changing character very quickly. They become extremely reactive, and that can sound exciting, but it also means that the P&L can become more violent and less forgiving. And again, I'm not looking to add stress. I'm looking to add palpable leverage. Okay, this is not really my game to get too crazy with the gamma. I'm not trying to maximize the contract explosiveness. I just want to express directional opinion with enough time and enough stability to manage my risk property. That means that I'm not diving too deeply into these things, and I'm personally not trying to leverage them. I respect the gamma, but as another reason not to get too cute on short expirations. And the Vega, this one I do pay attention to most in leaps. Okay, Vega tells you how sensitive the option is to implied volatility, and again, this matters a lot more in leaps, in my opinion, and longer duration contracts. And I do pay attention to them in my longer term ideas, a year or longer. Anything I'm looking to hold or considering to hold through earnings. Sorry. If I buy a long dated options when implied volatility is way above normal, then I may be paying too much for that contract. Even if I'm right on the stock eventually or the move eventually, that inflated volatility can come out of the option and hurt me. So with longer term options, I like comparing the current IV or implied volatility to what is normal historically for that ticker. And this is very easy to do, okay? Don't overcomplicate it. Just ask your AI, what is the historical average IV or implied volatility on X ticker for long dated options? I literally have a thread in my OpenAI, my ChatGPT. I have a thread where I've kind of coached it for what I'm looking for. I want long dated options a year out. It's gotten smart enough now that I can actually go pull the real chain, and it will pull a historical average for expiries 365 plus days out. It will give you an average. You can train your AI to do so. It's a very simple prompt. If you guys want it, I can maybe scroll up and find mine, but honestly, just tell it that you want historical IV data averages for whatever stock you give it, and its memory, it'll know what you want. Mine, I literally say now do. The most recent one I did was SoFi. I said now do SoFi, and it told me what the historical averages are. We're below it right now. That's really all I do. I just want to make sure that I am below historical averages and not overpaying. What it is if you're doing in my opinion, and you guys know this for most of my models, I don't want to be buying things that are running away, especially for a long-term idea. I don't want to be buying all-time highs and stuff. I'm waiting for pullbacks. But when things are super volatile or running away, like a stock is just ripping into new highs, the IV, or on like a big move of a day, the IV is going to be high. Okay, so like as jumpy as you might feel, I have models that help me not do this, but try not to have FOMO in your longer term options. If that IV is too high, you're going to pay the price on that, okay? So with leaps, Vega matters more in my process because volatility pricing matters more when I'm holding for a bigger move over a longer period. It can eat you up. And Rho is one that, look, it measures sensitivity to interest rates, and for my style, it's the least important of the Greeks for me. I might need to look at this right now because interest rates are creeping up. It's just not one for my style that I pay much attention to. Just being honest, guys, I don't pay attention to Rho. Okay, I'm not going to come in here and try to teach you some Rho strategy I don't use. All right, so look. If I strip it all down, the way I trade options is first I decide whether or not I want to own the underlying in that direction. What's my model? What's my trigger? And then second, I estimate the move I am looking for. Okay, my ground rules, my risk, my target. And then I check the earnings. That's always first. Is there time before earnings for that move to happen? And I never hold a swing trade, damn sure never hold an options through an earnings report. Okay, NVIDIA is the only one you ever need to know. NVIDIA keeps blowing out earnings and keeps selling off. You don't know, even if you don't know the reaction. I don't do it. And then I estimate how long the move could realistically take based on the recent history around inflection points or trigger areas on the chart. And fourth, I choose an expiration that gives the setup time to work, usually with a little bit of extra cushion. All right, meaning that if the next earnings date is 30 days away, guys, I'm looking for around 40-ish days, the week behind earnings, because I might want to give it time up until earnings because some of the best companies in the world typically get what I call an earnings run-up. Okay, I'm not going to hold it through the earnings, but those last 4 or 5 trading days before earnings, a lot of times you'll see these things run up because who wants to hold NVIDIA short into earnings, okay? Just an easy example there. And then fifth, I stay around or slightly in the money so the contract in my experience, behaves more cleanly. And if it's a leap style position, I do look at and research the historical IV and decide whether it feels expensive relative to that history. And that's it, okay? The Greeks matter. Of course, the Greeks matter. They explain why the contracts behaves the way that they behave, how the pricing moves. The Greeks do explain that, okay? So of course they matter. It's not what I'm suggesting here. But I don't want newer traders, newer people exposing themselves to options to do what I did, okay? I got trapped into thinking that you need to master every Greek before you can trade options well. And for my style, it became overcomplicated fast. And it can also, one other thing that it truly did was that it over-validated or gave additional conviction because I thought I found some great calculation or little edge here within the Greeks. And you'll think you see things. You'll see little things in the Greeks or nuance and be like, oh, they're getting this one because of this, because of the theta, the gamma, the delta, whatever it may be. I stopped paying attention to it. I'm trading the chart. I'm buying at or around the money with the expiration that makes sense. Okay. And I've gotten used over years of this now, 60 to 200% on the ones that win, 30 to 60% on the losers. That's what happens, and I don't need to overcalculate the Greeks because I have enough data that's what I see happening, okay? And I don't want to say that. I want to say one other thing, but I won't. But look, my edge is not coming from the advanced Greek modeling. It's coming from trading the leaders with proper market timing and respecting my risk profile, meaning no lotteries, no moonshots based off of Greeks or short-dated options, okay? I trade the triple R or my mother, God. I trade the triple R or my other options, and it's based on the chart, not the Greeks. I use options to add leverage, not complexity, all right? So that's my my spiel. I was asked to retouch on options. I will share the slides. There will be a recording of this, of course, if anybody wants to. I know I kind of just rambled through it. But what I want, my intent here, you need to understand how Greeks affect option pricing, okay? But I still want to stand on the hill of don't let it overcomplicate what you do, okay? I just don't. I don't do it. I use options for leverage and not complexities. So if anybody wants to follow up on this and ask any additional questions, trust me, I know it's one of those things. It's inherently complex options. All right. So I understand wanting to know more about it and wanting to understand more about it, but don't allow it to complicate things. I implore you not to do that. Don't let it overcomplicate what we're doing here. With my models and stuff, like we're trading the charts and we're simply adding a bit of leverage by choosing the contract that has that time window that makes sense to us, and I go at or slightly in the money. That's all I think about it anymore, guys. And then as I said with leaps, I do pay attention to IV. All right, so I don't want it to overcomplicate things, but of course, if you want to know more, there's some other resources I can give you, and then I will talk to anyone on questions they may have. But guys, that's it. That's it for me on options. All right. I don't see any questions coming in now, and I want to get through this robotics thing, and then get into kind of more. Yeah, Bruce. Yes, sir. Okay. Hit me up, buddy. If there's anything else you want to talk about. Got it. All right. Is there a book you recommend on start? Yes. Let me. It's a snooze. It's a snooze of a book. But yes, I do have one. That I did read. I didn't finish it. I'm not even gonna lie to you. But it's a good book. It is a good book. And again, I understand there's like I am a student of the markets every day. Okay. So I understand the urge to want to learn everything that we can about this. And I respect it. Just don't let it take a year or 6 months or whatever to get through this textbook on options. Just to, I don't even use. I don't use it. I don't ever complicate. All right. Yes. Let me make a note, or I will forget. I'll look at the chat. I want to remember to send that book, and yeah, I have your email. So guys, let's do this, man. I want to talk about robotics, okay? I want to talk about robotics, and before I talk about robotics, something I say from time to time is be careful listening to anybody giving you big ideas. All right. Be careful to anyone giving you big numbers. There's a mosquito in here, and I have the blood type that thing's going to mess me up. Sorry. Be careful listening to anyone giving you deep analysis and research. All right. I say this all the time. I don't care. And look, dude, come on. I'm not trying to suggest that I'm giving better anything than a Tom Lee or a, who's the one that got brought up recently? Any of these super investors, okay? But you have to understand, guys. They're sharing their analysis. Kathy Wood, all this stuff. Like, another word for their analysis and their due diligence is bias, okay? They are sharing their bias. And you shouldn't be trading the book of Kathy Wood. You shouldn't be trading the book of Tom Lee. I promise you, they can be right longer. They can be wrong until they're right longer than you can. Okay, so, I just want to say that like this, what I'm about to do here isn't really typical what I do. I'm going to talk about numbers and stuff like that. So just understand, in a nutshell, what I am suggesting here in robotics is that consensus agrees pretty much is that we're looking at 3 to 10x the robotics industry in the next decade. Okay, so really my intent here is more to share my excitement in that idea alone. Okay? That's pretty exciting to me. All right, so I'm going to say some numbers here and all, but don't think that this is me saying I'm convinced and buy it no matter what, and who cares, it's going to go up one day. That's not what I'm saying, okay? But look, tonight's idea is it's simple, and that is that robotics is still early, okay? But it's no longer theoretical. Global factories installed over 500,000 industrial robots in 2024. A lot of my numbers are 2024. A lot of the numbers for 2025, I think, are going to surprise, but they're still coming out. A lot of the studies have not been released from the most credible of resources at this time. But more than double the level from 10 years ago. Obviously, I mean, this stuff is really scaling fast. But the installed base of industrial robotics worldwide reached 4.28 million in 2023, and professional robot sales reached nearly 200,000 in 2024. On top of that, market researchers are projecting the broader robotics market to keep compounding strongly over the next decade. As I said, ranging from 3 to 10x, that's significant. That is significant. Okay, it's why I'm like kind of stuck on this robotics thing right now. And in other words, the adoption it's here. Okay, it is happening, and the growth runway still looks strong. Okay, and the reason this matters right now to me is that the broader market is selling off. Okay, I would suggest I'll say it. I have macro reasons, okay? And not because the robotics thesis is broken. And as of March 27th, the Dow officially entered correction territory. The NASDAQ was already in it, and S&P has dropped sharply as geopolitical risk and oil price pressures the markets, all right? That setup matters to me as an investor because when real long-term themes get sold down with everything else, that's often when the best names go on sale. All right, I talk about this often. This is an opportunity, guys. Corrections are opportunities. What's that saying? Never let a good panic go to waste. Somebody said that. Might have been Warren. All right. But look, I'm not saying robotics is immune to drawdowns. The robotics sector is in drawdown, okay? I'm saying the drawdown may be macro-driven while the long-term demand curve is still rising. I'm saying this could be an opportunity, all right? And that is where asymmetry is born. So if you want to get into robotics, this is what's important to me, all right? There's 5. I'm going to talk about 4 quickly here, but there's 5 themes within the theme that I want to touch on quickly here today. So I want to start with supply chain, and this is easy for me. And guys, I'm not going to get speculative, okay? I don't see a reason to. If the industry is going to 3 to 10x, then why do I need to buy the names that nobody's heard of yet, okay? That haven't proven themselves just yet, okay? Yeah, okay, they could 20x, Snax. Okay, they could also go bankrupt. All right, the ones I'm going to talk about today are less likely to do so. All right, so Amazon has deployed over 1 million robots across its operations, and management says its new AI foundation model can improve robot fleet travel efficiency by 10%. 10% in a multi-trillion-dollar industry is significant. All right, that is adoption at scale. And then the other one that I really like here is Symbotic. All right, SYM. It's a more direct, pure play expression of warehouse automation. In its latest investor presentation, it showed $22.3 billion backlog. That's something that stands out to me. Okay, the last time I said that was for BE. I don't remember the exact number, but I did a long-term investing video about power and AI for BE, and I talked about their backlog standing out to me. So, and it's something to me like it's. I mean, they've got a backlog of customers for the next. I think it was 4 years for SYM, or I might be thinking of BE. But anyways, sorry, I got a little distracted there. There's a lot of bugs in my. I must have left the door open in here. But guys, look, Amazon SYM for supply chain leaders. All right, this tier is not about hope. It's about logistics automation that's already happening, and it is scaling. Okay. Next up for me, that's interesting, another tier or theme, I would say a tier within the theme, is industrial robotics. And this is the most mature and easiest to underwrite layer of the stack for me. All right, global factory robot demand has already crossed 500,000 units annually for 4 straight years, and Asia accounted for 74% of the new deployment in 2024. I think the US numbers are going to be insane over the next few years, I think, but do your own research on that. But I like Fanuc here, and it's a Japanese ticker, 6954. You'll have to request, depends on where you are, but you may have to request TSC trading permission. Shouldn't be an issue with IBKR or any major broker, okay? But it's a name I've traded before, and it's holding up well. It's coming out of a multi-year consolidation. I like the name. I like their scalability. It's one of the foundational names in the industrial automation with over 1 million Fanuc robots installed worldwide and over 40 million products installed across CNC robotics, factory automation, and support coverage in 100 companies and more than 280 service locations. Guys, they're a leader, okay? I want to be trading leaders. Fanuc, Japanese technology, I like it, all right? This is not a concept stock. It's real picks and shovels of industrial automation leaders, and y'all boot campers know how much I like the picks and shovels. And an honorable mention here would be, I don't know how to say this right, but Daifuku, D-A-I-F-U-K-U. I'll drop that in chat. And it is ticker 6383, yeah. All right, so that's an honorable mention, same story, okay? Up next would be humanoids, and this is very exciting to me, all right? This goes anywhere from we're going to have nannies and maid humanoids to robot girlfriends and boyfriends, okay? Humanoids are the highest upside, least proven tier, and that's important. It means that it is a speculative layer. I have to say that, but the market size forecasts it's because of this, is the size forecasts for this market are all over the place. I don't think everyone is fully visualizing the scale of humanoid robotics, and that tells you two things. And it's early, and the upside could be enormous if adoption happens. I believe it will. Markets and Markets projects the humanoid robots market could grow from let's just call it 3 billion in 2025 to 15 in 2030. That's 5x in 4 years. That's 5x in 4 years. Okay? And then Goldman Sachs is projecting the opportunity could reach 38 billion by 2035. It's 10x. All right, that's over 10x. Well over. It's 14x. Guys, this is serious, okay? So Tesla is my pick here. All right, I don't see a reason to get crazy on this until some company comes out with the girlfriend boyfriend side of this thing. I think Optimus is where we need to be focused. Okay, so the other one would be the last tier that we'll talk about here today. Would be medical robotics, and this is high margin and deeply embedded into workflows. Intuitive Surgical is good enough for me here. They are my focus. This is a crazy number to me. It's a shocking number to me. They performed over 3.1 million procedures in 2025. That's wild. I don't spend much time in the medical industry or in hospitals. I didn't realize that. I mean, that's wild. Over 3 million procedures in 1 year, performed by robots and overseen by doctors. It's wild. Okay, so look, man, they are selling their systems all over the world. They have sort of like a service stack. It's a fantastic company. Again, I don't want to get into selling you on the company, more so pointing out that it's there. Medical robotics is what I mean. Okay, and my favorite is ISRG for this. Okay, so robotics is not any one trade. All right, it is a stack. As I said, it's Amazon for me. These are the ones I like the best, the leaders. And I will go ahead and share a watch list that I've got in chat. All right, this is my robotics focus, but it's Amazon Symbotic for logistics, Fanuc for industrial automation, Tesla for humanoid upside, and ISRG, Intuitive Surgical, for proven medical solutions. Okay, and if this market correction deepens, I think it creates a better entry into leaders of a theme that still has years, decades of runway. All right, this is a big one for me. This is one of those ones 10, 20 years down the road. I think it could be significant in longer term portfolios. All right, and I am still exploring a fifth tier here, and that is defensive robotics. Maybe we'll touch on that another week. I'm not ready on that one yet, but I think it's very interesting. Okay, so that's what I got, guys, as far as the spiels and slides go. I hope that was bearable. I typically like to do more analysis and questions, but I was excited to share I needed to share the options, and I am excited about robotics. So looking at some stuff. Somebody have something to say? Nope. I got a question here. What about robotics within agriculture? Yeah, see, you know what? That's a good point. And I do have, no, that was, I think it was Justin or Alex that we'll get to about the agriculture names mentioned in chat. But no, that's actually a really good point. I have one here on focus, FTI. Yeah, so this is a robotics company that is doing, I think it's like deep sea oil mining with robotics. Yeah. So Christian, great point. So maybe a 6th tier and a 7th. Okay, so like mining and agriculture, stuff like that. You're absolutely right. I just don't really have any names that are on my radar. Like FTI came on my radar today, right? So as I said, maybe with defensive robotics, I'll look into that stuff as well. Great point there. Thank you, Christian. All right. If I don't see anything else, I'm going to jump into Michael. You got something you want to ask? I got a hand raise here. Might have been an accident. Just holler if you need something, Michael. Without that, let's do some analysis real quick here. I think you guys probably know what's coming. All right, look at this. I mean, look at this, guys. I don't want to get ranty at all here, but guys, look, I turned these cameras on in like September or August, September, or whatever, and started offering a program in October, and the markets broke October 10th. They really broke November 20th, okay? And they just started going sideways, hitting a topping cycle. And, I pretty quickly missed this move where it was just every single day I had ideas, trades, triggers, follow through, money, all right? So what I've realized, though, just a few days ago, I realized something that, and it's come from feedback, frankly. And I really appreciate you guys reaching out and letting me know. Like, listen, I don't need to get deep on this, guys. I think it's more important this chop and churn market that we have gone through, and those of you that have been around with me for it, I promise you that we have learned better lessons in this than when this kind of market comes back and we're printing money. I promise you the real lessons have been learned in the last 3 months, or specifically the last 1.5. Okay, and those of you that have scaled back size and position count, the ones that have done that, good on you. And I promise you that, like, it's that quote that I keep referencing lately. It's like, it's going to be very easy to make money in a time like this, okay? In a trending, clean, follow through market that we are usually in, it's going to be very easy, okay? But we have to become traders that don't blow it in the churn and blow it in the changes of character, all right? We have to know market breadth and how to spot these things and start to scale it back, okay? And I'm glad that I actually am going to have this reference to go back to in the future when the next one comes, because it will, okay? I do genuinely believe that we learned better lessons here, all right? So anyways, what did we talk about? We talked about losing the daily, the weekly, the monthly. Well, we've done all of that, guys. We're in a corrective market. I am favoring downside of price action until we change character. That requires that we take out swing highs, build above. We have to take out a swing high, make a higher low, and start to build above. You don't even have to build that one, because if it's going to be a real change in character, it's right here, and many come from it. If we're going to enter a new rally in the U.S. market, which I would guarantee, I don't like to speak in absolutes, but we're likely to, all right? You don't have to catch the first one, because look at all the ones that come after, okay? You don't have to catch the first one, because look at all the ones that come after, all right? And then, yeah, we change character, you need to change your tune. This market breadth matters in a time like this, okay? You don't have to catch the first one, because look at all the ones that come after. Okay, guys? So just look, don't be too jumpy on an up sequence in the market. These are things I've been saying a lot. I won't stop saying, because it matters. All right? We can jump over into the Qs. Guys, you know, come on. Come on. Yeah, I wanted tech too. And the idea when tech was kind of bunching up here. Come on. Why does it do this? That doesn't feel right either. There it is. All right. When tech was bunching up here at over the 200, and the SPY was rolling just a little bit more, it was like, hey, maybe this is going to get going. But what are my rules? What are the market breadth structure rules that matter, guys? Is you don't guess. I have to stop cussing, because I just realized that I'm getting. I can't. I have to watch my mouth. YouTube doesn't like it. Anyways, so I was kind of screaming like, yeah, I know. Yeah, I want to be in tech too when it goes. Okay, but let it go. Okay, it didn't go, and people try to predict. I'm not talking to anyone. Just broadly, like on the internet, I see people are predicting and stuff. And look, it rolled. Okay, there was no change in character, so there was no reason to go heavy into tech. Okay, if you took a trade or two here or there, fine, size properly. Okay, but there was no reason to try to predict our bottoming right here, because we were at the 200. That was a big reason I was seeing a lot. We're at the 200, we're going to bounce. Well, we didn't. Okay? We didn't. We simply didn't. And by waiting for structural change in character and confirmation, protected us. All right? That goes for the IWM as well. I was just talking about how IWM was actually looking a little better than the others. All right? Well, we're back to hanging on a cliff. Okay? Guys, if it does this, it's gone. All right? So we'll just see. This thing has to now breach this swing high. I mean, yeah, I guess you could say it is still holding up a little bit better than the others. We had a swing high here that it came down, got above. It's pulling back. If it holds above it, then, look, I just saw that rate cuts aren't, the odds of rate cuts resuming don't come again until 2027. That was a really sloppy way of saying that. But rate cuts are not on the table as of right now, okay? I see that question about Robo. I will absolutely get back to it. So yeah, look, guys, those are the major indexes. RSP, I mean, we're losing the equally weighteds as well. We'll look at the QQQE as well. Yeah, look, guys, come on. Market's correcting, okay? So do not try to predict bottom is all I would say. A couple things. Let's look at the QQQE as well. No, come on, guys. All right, look. We lost it, guys. We lost everything. We lost the daily, then the weekly, then the monthly. Remember this for the future, okay? It will happen again, all right? And that's how you protect yourself, and it's how you short things coming down if you want to be aggressive to the downside. And now, okay, so what do short ideas look like? Any pops that fail again, just like the last one that I talked about last week. Okay, didn't get up over my levels. You could have done the hourly. I'll talk about that, okay? If you want to be a little more aggressive, there was a beautiful hourly short here, lower high short over the, the stuff is fractal. Let's do 1 hour on the SPY. You guys see it? You guys see all these triple R's on the SPY? Sorry, let me move it down here. Okay? These are triple R's right here, right here, right here, right here. Invert it. You guys see those triple R's? Retracement, reaction, remount. Retracement, reaction, remount. Retracement, reaction, remount. All this stuff, none of them break swing low. So if you want to be more aggressive, I was frankly I was a little upset about my ARC trade. I needed like one more week on that contract. So I just didn't roll it over to the hourly. When the SPY popped up this latest time, on the daily is what I'm talking about. The reason I just referenced that is because the daily popped back up into the 200 here, right here. So this latest move. Okay, so we made a lower high, a lower low in this lower high, right? So it didn't get above it, which is where I would have triggered a triple R. Like I like my stuff to get above. So a triple R to the downside, I would have needed it below. So this move should have come below and then back through on the daily. So that didn't happen on the daily, but it happened on the 4 hour and the hourly. So there was a trade there. Markets are fractal. Roll it down. You guys know what I mean. If you don't, ask me. All right. If you want a deeper explanation on that, then we'll get into it. Otherwise, I'll move on. But yeah, look, guys. So the next short would be, some sort of tweet comes out or whatever that pops up and fails the level again. All right. This is a monthly support level that we just lost. Are we going to retest it? Yeah, probably, maybe. If we do and we fail it and that 9 moves over, sorry, that was sloppy, and that 9 rolls over, that's the short. Stop, target, okay? So we still have plenty of room down to the prior cycle high, which is what we're likely to test here. Look at this last one, this last corrective market. It ticked it, okay? We lost the daily, weekly, monthly. This is what I'm talking about right here, losing the monthly. We lost the monthly, okay? Look at how similar this stuff is, guys. It's market structure. Lose the monthly, pop back up, fail that 200 again. That's actually where I got a good series of a good series of shorts off, and I'm hoping to maybe get a second round for myself here in this current move. So if we get a little relief rally that fails that and rolls over, then I would love to take something down to this level here, all right? We'll see. We'll see what happens, guys. All right, so that's the idea for any shorts going forward, and you know what I need to talk about long. I'm not interested in longs right now. So that's my, okay, sorry. Let's do a few sectors or try to get through this. I never really know if this feels like it's going too long, guys. My one way of knowing is if I have attention is questions. Let's do some sectors. All right. Oh, God. The first one is ARC. You fucker. All right. Let's look at it. Yep. That was my ARC trade. My ARC short. This was my short vehicle for the market. It hung up here a little bit. I thought about rolling the contracts. It might have been on this move here. I wish I had done it. I didn't do it. I was right around break even. I was like, I should roll these and give it a little bit more time. I didn't do it. And I paid for that, okay, because we had that tweet early in the week or last week that gapped the market up. I was saying I don't believe it, but that has nothing to do with my risk on the trade. I'm not going to let this thing pop back up into here. At that time, I had too much theta, too much time decay, that if it really popped up, took that swing high, I would have been down 40, 50, 60, 70, 80% on those contracts. Not knowing, of course, I don't, maybe the tweets were real. And, I couldn't hold it anymore. I ended up taking a loss, I think 18% on these contracts, which is frustrating seeing where it is. But it is what it is. Theta got me. I don't hate the trade. There was nothing wrong with the trade, but it's the world you live in with options, okay? This one got me. All good, all good. Doesn't mean another trade won't set up. We'll see. Okay, so let's go to software. This was something that was asked. Let's see, is Chauncey here? No, he'll probably watch this though. Chauncey asked about, it was IGV, so we'll look at IGV. Yeah, look, yeah, it's a short. It's a short, but I talked about in that video, the next triple R below, okay, downside triple R below, or you could get a shake and go. So it could pop down below this, pop back up, and then fail. And then I remember there being an example of this. Yeah, right here, okay? So that's exactly what I mean right here. So we're coming into this is the exact same thing, okay? This is historical price action structure. This is the exact same trade, all right? We came down in this monthly level. It popped up, a little relief rally, came down. You don't want to be buying breakouts, upside, downside, I don't care. So this is a shake and go. It broke out, faked everyone out, stopped everyone out. There's your trigger. Triple R trigger, didn't break structure, shake and go to the downside. So that's what I'm looking for here. It looks the same. That drawing is this trade, okay? That's 2R right there, okay? And then the other thing is you can just let it break down and do triple R's below. All right, so that's what I'm looking for there. UFO, this was holding up. Interesting to see. Yeah, okay, this was holding up, but look, the markets are rolling, okay? But this is an interesting sector along with robotics to me. Aerospace, defense, all that stuff, very interesting. Biotech, sitting on a cliff here. Thin structure retracement, plenty of room to the 200. No interest in biotech. Not typically a sector that I'm overly interested in. Anyways, this is another way of watching aerospace and defense. Yeah, look, it's breaking down. It's breaking down. If it does this, it's gone for a little while with the markets. If it holds up here, though, that'll be interesting to see, but I'm not interested below the 50 for short-term swing trades, okay? We can talk about longer term stuff. I do believe in the space. Okay, XLY, discretionary. Look, we're losing it, okay? We're losing it. And this was a strong sector just a few weeks back. We're losing it, guys. All right, this is something that actually could be an attractive short. If this pops back up and tests that level, that's structure, that's short. 9 EMA comes down through. All right, that's actually quite attractive to me. I hadn't looked at yet. All right, if the oil trade is going to continue to put pressure on consumer spending, this is actually interesting to me. All right, there's an idea. There's an idea. Mags, I talked about this. Guys. This is a structural thing for me. If we lose this level, come back up and fail it, goodbye everything, all right? This is the biggest weighted stuff in the world here. Financials let us down. Guys, I mean, come on. All right, the markets are looking nasty. Let's just speed this up here and get into questions. Yeah, the markets are nasty, guys. This is another level we need to watch here. Aerospace and defense, again, I already said it, it's holding up. If this can react or even just like maybe hold this structural weekly swing low, I think it is. Yeah, guys. All right, so we got some room here for this to not completely fall off a cliff. All right, so pay attention to it in the coming weeks. Maybe we get an opportunity here. We still have the SpaceX IPO coming. I think that's going to lift the speculation at least of the entire space. All right, we got robotics, bots. So I had a question here, Robo ETF. There's different ones. I think iBot is another one. I don't think anything particularly of them because I don't track the holdings of these things. Maybe just looking into the liquidity of the ETFs would be another way. But yeah, it looks like the rest of the stuff. I wasn't aware of Robo. I watch iBot, yeah, and bots. But I'll put this over here on my robotics list. There's no reason not to. Guys, here is my robotics list in chat. Oh, I already did that. Anyways, what were we doing? ETFs. Couple more here, guys. I mean, I don't need to. Here, let's go into what some of the ones that matter. Look at that. This matters. All right, if we lose this, another thing I've been talking about, if we lose semis, kiss the market goodbye for a little while, guys. Okay. Okay, so goodbye. So what are we looking for? We're looking for this to retrace a little bit more, come back up and fail the level. That would be a confirmation of losing major support. All right, so pay attention to this level here in semis, 375, call it. Healthcare, third heaviest weighted sector in the market. We already lost it. All right, then we lost to 200. We're failing that. Guys, I mean, come on. Markets are very, very, very heavy right now. There is more downside on the table. We are not at max pain. Lost communications. All right, this is another one we can look at to come up and fail. Well, okay. This is another one we can look up to come back. Sorry, control. This is one that we can look at to pop up and fail, okay? And get a move down into this level. I think I might like consumer discretionary a little bit more. This is coming down heavy because of Meta, would be my guess. I know that's one of the major holdings here. Home builders is one that I'm looking at maybe for a scoop up if the market's correct pretty hard. Yeah, I don't want to talk about that idea yet. Uranium I've noticed to be holding up decently recently. Yeah, let's see. Let's see if this can hold up here. Let's check it out on the weekly. Still got some structure, and yeah, let's see if uranium can hold up. All right, I think that's enough. Resources, another one. Let's see if this can hold up. Okay, so there's some stuff to look at, and so that'll kind of roll me into longer term ideas, guys. And in a corrective market, you want to start looking at the weekly and the monthly charts. Okay, the biggest names, companies, ETF indexes in the world. Look for corrections, broad market corrections to give you opportunities. Okay, to get into the best companies, ETFs in the world. Guys, this is opportunity. All right, the market's correct, and then they go back up. Historically, that's what happens 100% of the time. Markets go up. Don't fear this stuff, guys. Don't fear this. All right, we work on ways all the time to not be overexposed to it. We have our risk profiles. We shouldn't be long and strong at the top of the market cycle, especially with topping signals. So, guys, we should have some cash on hand, and we should be looking for opportunities. We should be looking for signals. I'm not asking you to call anything. Look for the signals. All right, so what can that be? That can be the change of character for swing trading, okay? But investing, we have some other signals. Let's pull up. We're going to get to gold here in just a second. Thank you. Let's pull up Tom Tool. All right. So I got a new monthly triple R here in the Tom Tool. Guys, look, man, at the end of the day, I'm trying to build a tool that simplifies investing because I do believe it to be simple. All right. Just wait for panic, wait for market corrections to buy the best companies in the world. All right. That can be anything you click on here. We got different stuff. All right. It'll run the sim for you. And show you historically, move your capital around to what makes sense for you, okay? Run some historical, had you done it, if you had done it, it would have worked, you should have done it, okay? Just like allow this to help you visualize. Maybe you weren't investing in 2008, but maybe you were in 2020. Run the sim for buying Amazon. I mean, guys, come on. What the hell? Come on. All right, this stuff is pretty exciting. Okay, and then we got the monthly triple R trigger here. I'm adding names here. Let's just do Amazon again. $1,000 starting in 2010, triple R remount. Let's look at that visually. Amazon. 1 month. I'm doing a presentation. I'm building a in-person presentation that I want to start doing all over. But anyways, these markers are for triple R triggers, meaning I have a stop on them. But from a dollar cost averaging, which is what investing is, right? Like buy and hold, all of these are green, okay? But anyways, just know that the trigger dates that we're about to look at on the Tom tool are these green dots, okay? It's a retracement, reaction, remount on the monthly candle. Retracement, reaction, remount, monthly candle. This one didn't work from a stop below recent low to our target standpoint, but you're all good from a DCA buy and hold. But here is a retracement, reaction, remount, okay? Triple R right here on the monthly chart, okay? Triple R right here on the monthly chart, here, all that stuff. But guys, anyways, that's what's loaded into here. I continue to update this stuff, but you can just run the sims, run the sims. Everything is explained on how Tom works. Okay, all I want to say is this tool is just meant to help you visualize if you had done it, okay? And then also give alerts in the future on when these things happen. All right, there's explainers on there. It's free. One day it won't be, but we're nowhere near that day, guys. I don't even know. I'm not worried about that right now, but I mean, at some point, I'm going to have to charge something for the alert service. Like, it costs money to send text, it costs money to run this, to update it, all the stuff. But, you know, it's going to be cheaper than, probably well cheaper than a Netflix subscription. And it literally emails you free money. Anyways, who cares about all that? Guys, the tool is live now. Go run the sim, play with it if you'd like. And it's sending out alerts. So that's what this tool is meant to do, is to help you visualize what it's like to buy. Extreme Fear is the RSI weekly RSI 30 is extreme, oversold, or fear levels. And then the triple R is a structural trend continuation on a long-term time frame. Very good times to be DCAing into stuff. All right, that's really all I wanted to talk about on long term. Let me pull my notes up. I actually think I had something. I'm sorry. So right now we've got weekly RSIs triggering on Microsoft. All right, we've got weekly triple R's triggering on Microsoft. Meta is getting very, very close. Tesla is getting close. Amazon is getting close. So be watching those things. And then I need to upload Amazon and Tesla. So they'll have little on watch tabs there. But really all it is just saying that the Tesla 1 week. Come on. Come on. I did double click. Is it going to come? No. Oh. Sorry. Right, so we're at 38. So we're getting down towards there, guys. If Tesla keeps pulling back, all right, and we get an RSI weekly 30 trigger, then we're going to want to start looking at that stuff. The last one was here, okay? This is the last weekly RSI 30 trigger on Tesla. I'm going to buy the next one, okay? So that's all it means. If they're on watch, they're approaching. If they are active, that means that they are. Go look at it, make your own investment decisions, use historical data and pricing to help with that decision making. Google, Nvidia, Apple, Netflix are well off of weekly RSI 30s. And then we've got, but you know, we'll be watching because we are in a corrective market. So if those things pull back, then guys, like we're going to want to be buying Mag 7s on weekly RSI 30 triggers. And then you got the monthly triple R. Netflix, Amazon, Meta, Microsoft are on watch. Apple, Tesla, Nvidia still need to close below the 9. But Netflix, Amazon, Meta, and Microsoft are below. So I'll just pull the first one up, Netflix. All right, they are below their 9. 1 month on their monthly candle. So these things, I'm watching these things closely, right? You've gotten closes below the 9. We're coming up here testing it. Back through 100 on Netflix is a monthly triple R, and we did also just recently have the 1 week RSI 30 signal. That email went out on this candle back here, or it was this one of them. I don't know. It's up well over 20% since that signal. So this was a weekly RSI 30 signal down here, and possibly a 1 month trend continuation signal coming on Netflix as well. All right, we'll see how the market treats it. Was expecting a pop in gold. I think that's it for me. Oh yeah, so mags. If you don't want a name pick, SPY, QQQ, VOO, all that stuff. Or we have mags right here. Okay, the Mag 7 ETF weekly, starting to get nasty. All right, we're gonna be watching. This is getting very close to starting to RSI 30 trigger. Holy crap! All right, cats are going at it. Those aren't my cats. Anyways, Meta, I want to talk about Meta real quick. You know, look, they're going through lawsuits or whatever. Apparently they lost something. Yeah, I'm looking at this as an opportunity is all I want to say about that. This is approaching an area where I'm going to be interested in investing in Meta. All right, So I think that's good enough. I'm going to start getting to names asked in chat for the week. Other markets, where do we flee to? Yeah, that's an interesting question. But I mean, honestly, everything's like sometimes you flee to cash, my friend. You know, you got emerging markets is like I've been eyeballing this a little bit, but I'm pretty sure most of this stuff is selling off as well. So sometimes the flee is to cash, right? Like gold is. We're going to talk about gold, Bitcoin. You know, like what do you want me to say? Here's emerging markets that was running away. It could set up. You've got a shake and go here on the weekly. Okay, you got a breakout, fake out, shake out. You got a shake and go on watch here on the weekly for emerging markets ETF. Keep an eye on that is what I would say. That's interesting. It's very interesting. It's got a good ways before it breaks structure. Structure being right here. Okay, there's an idea. I'll talk about that in coming videos. Thank you for bringing that up. But look, I looked through this stuff, and a lot of them are selling off. The world is selling off right now. Pull up the world markets. Whoops. You know, some of them are holding up, though, I will say. Some of them are holding up. Looks like a maybe box breakout there in China. That could be interesting. Taiwan is holding up well. Yeah, some of these are holding up. Okay, so yeah, okay, maybe look at some of the world markets, guys. All right. Australia. Ugh. So we'll look at emerging, and I'll keep an eye on that. We'll touch on that this week. Wow, Singapore holding up well. Okay, so we'll touch on that this week, guys. But just know that the current geopolitical situation, a lot of these countries are more exposed to Gulf oil than some others. Okay, so I'll touch on that this week. Good idea, Christian. Thank you. I was expecting, yeah, so let's get into this. I was expecting a pop in gold, GDX, tons of uncertainty. What's happening? Right, yeah. See, that's the thing, man, is like, I have to walk this line carefully. Like, I don't know everything about everything. Gosh, of course that's true. But like, I hate when people speak in absolutes, like when wars start or whatever. It's like gold's gonna rip because geopolitical uncertainty and flight to safety and all this stuff. Okay, well it didn't. And I've been in these years for I've been in these markets for 13 years, and I've seen too many times where the expected outcome is not what happened, to where it's like, I don't have the answer for you there, my friend. I don't know why gold has not been a flight to safety, but it hasn't, not yet. And I am not interested in gold, not yet. I mean, you could really just look at it as, guys, look at the move that gold has made. Okay, it becomes structural. Maybe let's not overthink it. Look at this. It's pulling back. Maybe people expected this uncertainty for a while and they've been buying it up. I mean, the banks, I can't think of the word. World banks is good enough, have been buying gold for years heavily, right? They front ran this move, okay? And now retail's interested in it, and maybe it's over. Maybe it's not, of course. Okay, but I don't have a signal, so let's talk about gold. All right, I don't have a signal right now. I talked about, I had a handful of people ask me about it privately in chat, and I got an email about it. People are looking at this as an opportunity right now. That's good and fine, and I understand why pullbacks in something that, whether you miss the move or you want to add to it, whatever it may be, but guys, this is a change of character. This is a break of structure and a change of character. Okay, look at the pullbacks that happened in this entire move. None of them broke the prior swing lows. Well, this one just did. It's a change in character, okay? And I think this one's a little bit cleaner than, yeah, okay? Like, see, I have arrows pointing to this because, look, I don't have any interest I don't give a shit about gold, okay? Like, I'm not going, it's called opportunity cost. If this is a topping signal for gold, look at how long it takes. You're going to invest in gold coming off of a blow-off top? Well, look what happened the last 2 times that happened. Your money's tied up for decades and years. Like, no thank you. No thank you. I need a signal. I need a signal because the current signal that I see in gold right here is a change in character. Okay? It's making lower lows and currently lower highs. Could that change Monday, this week, next week? Yes. But I encourage you to let it change. Okay? That's my thoughts on gold. Let it change. All right. It pulled back lower low. This is currently a lower high. That's the world I see. Okay, so there's a line in the sand. There's a line in the sand. This could become a range where I'm not going to tie up money and I'm not going to tie capital up in that range. So it either needs to do this or it does this, and I'm glad I didn't do anything. Okay, long at least. That's my thoughts on gold. It goes for silver. It goes for copper. It goes for precious metals. The trade might be over. It might not. But guys, I do like copper a little bit more. Maybe I shouldn't have mentioned it like that. But guys, this is a change in character. This is a change in character. I don't care how much due diligence there is out there about why the copper supply I don't care. I don't care. This is a change in character. Don't fight it. All right? Don't fight it because you're finding due diligence on the market. This is in a downtrend. If it's going to change, it's going to change and build above. These are the buys. All right? These are the buys. Let it break out, go to all-time highs. Let that stuff happen. Just because people are saying that the copper supply is going to be down for 30 years, like, okay, well, then the market will reflect it. The charts, the structure, the market will reflect it, not some person's due diligence. Okay, I promise that goes for everybody. That goes for everything, all the stuff out there. This looks like it could be beautiful here on the weekly, but let it happen. It's just like, I don't remember what it was, but I just pulled one of those up. At least this could be a shake and go with triple R back into the range. Okay, but like let it happen. So the first trade idea I see there is through last week's high. Not even that. It's actually through that one. So call it $59 on copper. Looks decently interesting, but this is the new line in the sand. Okay, this is our new swing low. So if you want to take a weekly triple R trigger through that, control your size, line in the sand, target. But again, I'm not fighting stuff. I'm not fighting stuff, guys. This is a daily downtrend. This is a daily downtrend. So you can see right there, same thing, line in the sand. You still have your daily 50 above. That is going to be resistance. But I see the trade there on the weekly chart. I do see it. All right, I don't see any questions, so I'm going to keep it moving. Bitcoin, I'm going through stuff that I was asked about in chat, emails, messages, whatever, throughout the week. Guys, drop anything once I get done. I'm winding down what I had to present. So my way of knowing when to end this thing is if I don't have any questions, then see you guys next week. So yeah, names asked in chat. We got Bitcoin here. My thoughts on Bitcoin and crypto as a whole. Guys, this is a bear flag. Okay? This is what bear flags look like. All right, I know it popped up a little bit and it got exciting, but I talked about this right here. I don't know why you want to go long on a bear flag. If you're DCAing, sure, go for it. We're at prior cycle highs, okay? Historically, that's been a good time or a time when Bitcoin turns around. So sure, if you're DCAing, do you, boo-boo, okay? But swing trading to the upside at the freaking brink of a bear flag breakdown, no thanks, okay? This is where we are right now. No thank you, okay? Change and character. If I want to go upside short term. DCA here, have fun. DCA down here, maybe have a little more fun. I will, okay? I think it might want to sweep these lows here. I don't know, okay? But I see something there that it might want to go down to. I believe in crypto long term. I don't like a swing trade to the upside on it right now. All right, we got gold. We just did that. I mean, guys, like WPM, look at all this stuff, guys. This is a change in character, okay? It's just, let's see. Let's see. You don't have to predict. I mean, you can be my guest if you want to predict, but I don't do it, all right? Guys, we lost it. It was a change in character. Are we reacting off of the 200? Yeah, okay. It could also do that. Okay. You know, it's let's see here. Here you go. Come down to the 200. Let me buy everything. Oh, no, it didn't. Broke down. You're immediately in drawdown. And I don't know how many years that is of waiting for my money to come back. Okay. Wait for the change in character. Let it get back above stuff and start to build above. Or you're predicting and you might tie your money up. I'm not interested. I'm not interested. It's opportunity cost. There are stronger sectors, better things, other things that we can do. You can use options if you want there's just better stuff that you can do. Like the reason I said the options thing is like some people want to get into certain things because they think it's like copper, it's going to go up 100, 200%. And it's like, okay, like one good trade. I don't care about any of that stuff, guys. There's better things out there to trade than things that are in clear downtrends. And there's better market timing and opportunities to come. I promise you that, guys. Maybe Cass is a better position right now. Like, do you really care about gold, or are we tied up in the headlines, right? Like, a lot of people out there are smart, and again, it just goes back to that bias thing, guys. If they're sharing their due diligence or their reasoning or their research, they're sharing their bias, guys. Don't get caught up in other people's trades. So the agriculture industry, Alex gave me, I don't know if he's here. I don't see him, but yeah, I appreciate this. This is a good call, man. This is one of those, you want to find strength in corrective markets. Well, here we go. Here we go. This stuff is RS leading. All right, look at that. You got a box breakout. Every triple R since a box where you had a shake and go that worked. Another one shake and go that with triple R that worked. You got another. I mean, that's some box breakout model using the triple R, 3 for 3. Yeah. Anyways, like the agriculture industry looks good to me. CF is another one that looks good to me. Don't buy the breakout on earnings. Let it pull back. I think that was earnings. No. Okay, but yeah, you can't buy this gap up. Okay, it's like that's the stuff. It's like people like, I used to think I was letting things run away, and it's like, damn, man, like I'm missing the move. It will triple R again, and if it's a strong company in a trend, and if Wall Street, the real money, agrees with you, it will hold structure. It will give an opportunity at a triple R again. It will trigger, and it will work more often than not. I wait for them. Right there. Boom. Better trade to me than, there it is, triple R. CTVA. Just one last one here on agriculture. Look at these triple R's. Fuck, man. All right, just let's move on. But significant RS in the agriculture industry. Thank you, Alex. Coal is another one with significant RS. Yeah, Mike, you brought this to my attention a couple times. I think you've been mentioning this. So yeah, look, this is a sector we need to be watching. I think it looks really attractive on the weekly as well. Yeah, look at that weekly triple R trigger. Gosh, gotta stop swearing. Look at that. Hey, don't tell me market structure and triple R's don't go hand in hand, because I'll prove you wrong. All right, I mean, come on, man, come on. That is beautiful to me. I hope you see what I see. All right, you have a major level, a retracement to it, retracement, reaction at or around our level, remount, stop, target. You're break even at this point. Don't lose money on this trade. Maybe even in profits, probably in profits in this world. Oh, that's another thing, consider like 1Rs, consider taking profits faster if you're trying to trade these markets. I'm doing as little as possible. But if you want to get in there a little more involved, then once you get to 1R, move your stop to that's always a rule. Move your stop to break even, but maybe even into profits, guys. Like pay the trader in in these markets. AMR is another coal that we should be watching. BTU, all right. That's a change in character. Right there, back through the 200, that could have been interesting. Yeah, we never broke structure. That's interesting there on the weekly. Let's look at the daily, see if anything stands out more. Nah. Just basically the same trigger. Anyways, coal. Coal is all I want to say. HCC, AMR. Here, let me drop some of these names in if anybody wants to copy and paste these. Or just hit me up, ask for watch lists. There we go. In chat is some of the names I'm talking about right now. Okay, and then some random names that were requested. I'm going to fly through. All right, HWM. I do like the aerospace and defense. I've talked about this. All right. Somebody asked. So yeah, the rest of these are just names that were asked in chat. So I'm going to go through this stuff, and this is just going to be analysis and stuff, how I look at markets, how I am currently judging the markets based on the environment that we are in, which is a clear solidified downtrend moving towards max pain. Okay. So you have to factor that into, I don't care how attractive any of these look or do not look. We must remember our current market environment. But again, also remember that this is where opportunities come from. Think longer term positioning, think Tom Tool. HWM, this is an aerospace and defense. Look at this. We're retracing here into structures. So, if we can hold this area, then yeah, it's attractive. But again, remember all the things I said to remember. If we lose it, guys, then you just roll over to the weekly and look at how much more room this can pull down before we break a thing. Okay? So imagine the markets get nasty for a couple more weeks. This thing comes down to 200. Okay, the 9 keeps curling down. Like, this is where, like, you don't have to get overly aggressive, guys. You don't have to get anxious. No FOMO. All right, this thing can keep coming down, right? It reacts off of this area. Maybe the markets clean up. Boom, there we go. You're into something that really looks like it wants to keep going in a sector that I think, you got SpaceX IPO, like that's what I see here. That's what I see here. This thing is looking to me like it's going to want to keep coming down. If it makes a higher low on the weekly, I like it back through the 9 a lot. That's actually something I need to make sure that I'm watching for. I actually like that a lot. Mike, I think that was, I think most of these here in the beginning are you, Mike. Good eye. SYM Symbotic is, I talked about this in the presentation earlier. I absolutely love it. Okay. I absolutely love this company. Long-term period, but the market that we are in, this is a big time head and shoulders. If we lose this level, I think there's going to be an even better opportunity for a long-term hold on this company. Okay, so that's the trade. Do we get back up? Do we change character with the market that is on our side? Okay, with a good healthy market, do we get over this 50, hold it and move above? Okay, well, I like it a lot better right there than trying to call it on this cliff. Okay, frankly, if it loses this cliff and does that, it's a short. I have a couple examples of what I want to show. I'll just do that now. Look at this structure. Okay, and look at what I just said. Losing it, testing it, and failing, being a short. Let's look at some examples. Nuclear, very hot theme. Look at this structure. I don't care about this stuff, guys. Okay, like, yes, I did talk about Symbotic. I do care about Symbotic long term. But when I'm talking about like shorts and swing trading, I don't care about these companies. Okay, it's 3 days to 3 months. I'm trading structure, not ideas, not due diligence, not research, none of it. It's structure, and I'm showing you guys structure that repeats. Okay, it's just that simple. So what do we get here? The same thing I just showed you. When you lose it, retest and fail, it's gone, guys. It's gone. So it's the same thing I showed you. You got below all major support and structure. You came back up, you failed it, and it's gone. All right, that's a short. IONQ. I don't care about the research on quantum computing. What happened here? I don't care how hot this sector was. You lost structure, you came back up and failed it, and it's gone. Okay? Lost structure, came back up, failed it, it's gone. Okay? It's a short. It's a short. All right. So anyways, SYM, I love it. That was the name. It was brought up. Do I like it? Yes, I like it. Do I like it from a swing trading standpoint right now? No, I do not, because of the market, and it needs to do this for me to like it for swing trading. And I would actually, frankly, love it if it did that. I'm not going to short it, but I'm going to start looking at an entry for longer term hold, because I like this company for other reasons we discussed. For robotics, this is supply chain robotics. Check it out. Dave, I haven't looked at Dave in a while. Man, this is a squeezer. I like have a vendetta with Dave because I had this in like $34 a while back, and it was shares. Like, I had no reason to get rid of it. Yeah, look at my little trade back here. Oh, good trade, man. I think it was actually a good trade too. I think it was like a 3.5 R. Oh my God. Yeah. So me and this one, I don't know. But anyways, looking at it now, look, the financial sector is quite heavy. This looks like that threat to me for Dave. Okay. That's the threat on Dave for me right now. It's got to get back up here to get back into squeeze mode, which it certainly can. You got some structure. If it does this, it's going to go back into squeeze mode. Likely. Palantir. Yeah, look, I talked about this too. I talked about this exact thing a couple weeks ago. Here's another one of those things. Losing structure, coming back up, failing it. It's a short. I said this a few days back, that if this thing fails at 200, it's a short. All right? It's doing it. Your asymmetry is short-sided on this trade. Your stop to our target. That's what I see there. For now. Do I like Palantir long-term? Yeah. Do I like their multiple right now? No. Okay. Could they pull back? Yeah, of course. I don't even remember what. I think they're still at like 300 times earnings or whatever. Yeah, something crazy. So, guys, it's okay if Palantir pulls back for a little while. It could set up a long-term opportunity. TSM, love it. Always love this company. Don't love the market. All right. Be watching SMH. This has work to do. This is another one. This happened twice. Looked like you wanted to get in here. The market was against us. Shouldn't have done it, okay? Looked like we wanted to get in here. It never really triggered. The market was against us. Shouldn't have done it, guys. This is why you don't try to fart the market. It's why you don't try to fight the market. And again, this is one of those things. It could get nasty. I expect TSM to hold up a little bit better than some others, but no, I don't like it right now. I am looking at TSM on, let's go back to it. TSM, I think it's kind of far away from this. 1 month. Look at the TSM monthly triple R triggers. This is what I'm looking to find another time to invest in it. There's your investments in TSM, monthly triple Rs. All right. I don't even think it's close on the weekly for a RSI weekly 30. No. Yeah. I don't know. If the markets get really nasty and TSM gives us an opportunity from a monthly triple R or a weekly RSI, then close your eyes and buy it. FIG was asked of me. I hate it. And I'm sorry if anyone hates that I just said that, but I've talked about this one a couple of times. Like, guys, this is a solidified downtrend. So what do I look for and stuff like this? You never know, okay? It's a recent IPO. You never know how long these things are going to stall and base out, so you need to wait for that character to change. This is a falling knife that I will not try to catch, all right? Changing character, let's think of something. Oh, boy. Victoria's Secret, my favorite AI argument trade. AI can't get rid of underwear. All right. Anyways, this is in an IPO cycle. So you don't buy it when it's going down. You let it change character. Okay. Let it change character, guys. Let it change. Like FIG is in this move. Okay. You need to let it break out, change character. What does that mean? It means it gets through the trend, makes a higher high, higher low, and starts to trend. Okay. So there's your first trade. That's the first one that I took. That was a while back. I don't remember trading. Yeah, it was 2024. Nice. Yeah. Anyways, let's go back to FIG and see what that could look like. Guys, it has work to do. I mean, I don't even want to draw trend lines on this yet. It's in a free fall. Sorry. It's in a free fall. I have nothing to do with this for a while. All right, so if you're invested in it, I'm sorry that my thoughts might not align with what you want to hear, but it needs to convincingly change character. That was dramatic. Convincingly change character, higher high, higher low, and then start to trend on volume. We're a ways away from that happening. I have no interest. AMD, I like AMD, but consider the market. Consider the market. It's trying. This is why you wait for confirmation. It could confirm, so the next time up through that level, if the market is with us, might be worth looking at, but I don't want it right now. BABA was mentioned. Listen, guys, I'm not a huge fan of trading China companies because of the headline risk. But look, I guess Trump's going out there in May. Just control your size, all right? That's the advice I'll give. Is control your size. Just be careful. Be careful. But yeah, I see a level there. Back through 143 if things clean up. the talks of the meeting with Z and Trump go well. We'll see. It's worth watching. It's not there for me right now. All right, guys, that's all I have as far as what I had on the docket for tonight. I don't see much coming in right now as far as questions. I'll give it some time, but if nobody has anything to ask, then I'll just thank you all for coming. Yeah, I know there was a lot said tonight, but hopefully there was some value. We were in a downtrend, you guys. I'm not going to fight it. So look, I think that's about it for me. Yeah, Bruce, thanks for being here, guys. Thanks for bearing with me. I think this was, about 90 minutes. Very informative meeting today. Yeah, Justin, thanks for being here, brother. Let's talk, man. I'm sure you're going through things, but I'm here for you. Lizzie, good to see you. Same message for you. I'm sure you're going through things as well. I'm ready when you're ready. Christian, good to see you, buddy. Jay, I see a Justin and a Jay. Jay, I don't know who that could be. Thanks for being here, though. Bruce, always thank you. Yeah, guys, all right. Looks like we're good to go. Oh, hey, what's up, Jarko? I even saw Toby in here tonight. But good to see you, man. Good to see you. All right. All right, later, guys. Thanks for hanging.